Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, December 10th. Tomorrow we have CPI in pre-market, and today we were red across the board for the second day in a row. And SPY did open with a small move up and then up to the 35 EMA, and from there we did get pushed back down to close in the red. There was a little bit of this up gap from last week open from yesterday, and we did close that out today on that drop down, and we took it all the way down to the bottom of the implied move, which was 601, and right there is where we bounced. And we didn't bounce very far, but we bounced right back in to close within the implied move. And SPX, same thing over here. We did open with a small move up to the 35 EMA, got pushed down at that level. Right here, we actually closed this gap out completely yesterday, so that wasn't even there. We did drop all the way down to the bottom of the implied move. And a really quick apology, I did not catch this until midday, but in last night's analysis, this 60.25, I actually put down as 60.50. The true values are always over here on the right. I just typed it out wrong, so 60.25 was the bottom of the implied move, and we did reverse back into the implied move at the very end of the day, just a little bit above that level. So SPY today did close down 0.31%, SPX down 0.3%, VIX pretty flat, up 0.07%, and in both SPY and SPX, we did trade completely within the implied move. And QQQ, we did open here with a pop up above the 35 EMA, and we actually took it almost all the way to the top of the implied move, which was 526. And just a little bit before that, we dropped down into the red. We lost that 35 EMA. And if you were looking down below, when we did see that pop, we were still underneath this red signal line. So when we did make all-time highs right here, we did see a bearish divergence, and then the signal line turned red. When we did see that pop up above the 35 EMA, this right here did not support it because we were trading underneath this red signal line. So we dropped back down and we took it all the way to the bottom of the implied move, which was 519. And we did tap the bottom of the implied move to the penny and then pushed back up in that last candle to close within the implied move. So QQQ did take it all the way from the top of the implied move all the way to the bottom of the implied move. So we did trade the entire implied move on the day, and QQQ down 0.34%. VXN flat today, down 0.06%. And we did stay completely within the implied move today. One of these days, I'm going to have a little scoreboard off to the side, and it's going to be how many times I say implied move in one video. All right, and we did end up staying above this up gap right here. We did come into it a little bit, but the bottom of the implied move right there caught us, and paired with this up gap, we did come back up at the end of the day. And IWM, we did open here with a drop down underneath the 30-minute 200 moving average. And then from there, we did come back up to the 35 EMA, which we have had quite a bit of trouble with over the past 2 weeks. And we came up to that 35 EMA and we dropped back down to close underneath the 30-minute 200 moving average. So we did reclaim that 30-minute 200 moving average briefly, got smacked back down by the 35 EMA, and ended up closing underneath the 30-minute 200 moving average. And we have not touched the 30-minute 200 moving average since back here. That was November 20th, right before our big rally to make new all-time highs in IWM. And then when we got pushed back down, this 35 EMA has been a level we saw in every single trading day, and it has been resistance for a little while, since right here, beginning of the month, December 3rd. And we basically consolidated back to the 30-minute 200 moving average. It wasn't a very clean catch on this level, and actually we closed underneath it. But if you look back over here, we had a very similar setup where we chopped around this 30-minute 200 moving average. We dropped down here. That was the 1 hour, and that is this level right here. And I'm getting a little bit ahead of myself here, so I'm going to stop and save this for the second half. But for today, we did close in the red underneath the 30-minute 200 moving average with the 35 EMA as resistance, and IWM did close down 0.43%. RVX closed up 0.51%, and we stayed completely within the implied move today. And then lastly, we have DIA. We also had a red day here today. We did open with a drop down into this gap right here. This is the up gap from 2 Mondays ago, not this Monday, not the one before that, but the one before that. And we dropped into that gap. This 30-minute 200 moving average was right in there, and we bounced on that level, brought it back into the green, and then we actually closed underneath the 30-minute 200 moving average here as well. So DIA and IWM did close underneath their 30-minute 200 moving averages. SPY, SPX, and QQQ are still above the 30-minute 200 moving average. But here today, we did see that technical bounce right away on it. Then we came back up and lost it, closed underneath. We did close this gap out completely today. You could see that long wick right here takes it all the way to the bottom of that gap, just underneath that 30-minute 200 moving average. Those two levels initially caught it, and we did get that bounce back up. And that technical bounce did not hold, but that was a great scalping opportunity right there. And DIA did close down today 0.31%, and we did trade within the implied move for the week and on the day. All right, so that was a recap of today. Let's go check out tomorrow's levels. Alright guys, so before we head into today's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you like this chart setting that I use with the blue candles on top, the red candles below, 35 EMA, 30-minute 200 moving average, and Stupid Willie, if you like this chart setting, then go to the first pinned comment, and I have a tutorial on how to set this up from start to finish in TradingView. And if you want to help support my channel, the thank you button below is always appreciated, and if you had a big day and you want to give back, then don't be afraid of that button. All right, so we have CPI this morning, and I am shifting my schedule to record in the morning. So it's about 7:45, and CPI comes out in 45 minutes. So this video might come out just a little bit after that, but this is still gonna be the trading range for the day. And in SPY, the implied move on the day is between 599 and 607, and that is from options. The 30-day average volatility 597 to 608 and 598 to 608 on Thursday's contract, which we also have PPI. And to the upside, the first level to look for is going to be the 35 EMA. We just had a pretty solid rally right above the 35 EMA. So right here, we bounced on the election gap, and then we had Nvidia earnings, and that brought us above the 35 EMA here, and we rallied this week. Monday and Tuesday, we did get underneath that, and we have been seeing the 35 EMA as resistance. If we do get above this 35 EMA, then 607 is the top of the implied move. 608 on Thursday's contract, and we're just a little bit short of all-time highs. We don't have all-time highs in today's trading range, so it's not necessarily a target for the day, but it could be for tomorrow. or towards the end of the week. And then to the downside, we have the 30-minute 200 moving average. Bottom of the implied move is 599, 598 on Thursday's contract, and the 1 hour 200 moving average is underneath that. So the last time we saw 30-minute and 1 hour 200 moving averages was right back here on top of the election gap that we bounced on. So 30-minute, we didn't catch it perfectly, but that 1 hour 200 moving average was right here. And we did chop around the 30-minute 200 moving average for a few days before reclaiming that 35 EMA. So remember that 35 EMA when it comes up to the 30-minute 200 moving average. So that is looking at it without the price like this. So 35 EMA coming up to the 30-minute 200 moving average. Same thing here. If we do drop, keep an eye on the 35 EMA. That could be a place where we do bounce if we do take it down first. All right, so that was SPY and SPX. Today's implied move is between 6,000 and 60.70, and that is from options. 30-day average volatility is 59.85 to 60.85 and 59.90 to 60.80 on Thursday's contract for PPI. And to the upside, we do have the 35 EMA. Same thing over here. We did have a pretty solid rally on top of the 35 EMA after we bounced on the election gap right here, and then after NVIDIA earnings right here. So we got back above the 35 EMA, and that was where we bounced all the way up until we made new all-time highs on Friday, and then we saw that rejection here in Stupid Willie. When making that new all-time high, we did that underneath the red signal line, and that did signal a cross back underneath the 35 EMA. So we are oversold here, but we also still have room to move lower. And so to the upside, I think I already said this, 35 EMA, that's our first level. 60.70 is the target for today if we get above the 35 EMA. 60.80 on Thursday's contract, and then we have all-time highs a little bit above that at 6,100. 3 cents short of 6,100. And to the downside, 30-minute 200 moving average, if we break that, 6,000, 59.90 on Thursday's contract, and the 1 hour 200 moving average is underneath that. So the 30-minute 200 moving average and the 1 hour 200 moving average, that momentum is facing up. The 35 EMA is coming down. So just look at the way the momentum is coming through our trading range. It is kind of sideways here. And the last time we saw the 30-minute 200 moving average, right here, it was not a clean catch, and it was the 1 hour that actually we bounced on, but we did chop around sideways around this level, and we bounced on the 1 hour. So keep that in mind. It doesn't have to repeat that way, but that is what happened last time. 50-day moving average is underneath all of that, still pretty far away. We are pretty overdue to meet up with that level, and that could be a force that pulls us lower in the near term. And then QQQ, the implied move over here today is between 516 and 526. That is from options. The 30-day average volatility is between 514 and 527. And then Thursday's contract, 515 to 526. And to the upside, 35 EMA. Pretty sure that 35 EMA is our first level in all five. And if we get above that, 525, 526 on Thursday's contract, and we do have all-time highs in our trading range today. It's at the very top at 526.72. 527 is the top of the trading range. So when a level is in our trading range, it is a target, but that also holds true for the 30-minute 200 moving average, which is at the bottom of the trading range. We also have this up gap from last week. The bottom of that gap is near the bottom of the implied move. So around 517 for the bottom of the gap. 516 is what I rounded the bottom of the implied move to. 515 on Thursday's contract, and the 30-minute 200 moving average at the bottom of the trading range. We are oversold here, but we definitely still have room. We do have this support gap though, which we did bounce on yesterday. Definitely not a big bounce, more of a technical bounce just to get us back into the implied move, but it is there. I would definitely look more towards the bottom of the gap as a support, especially with the way we're looking down here. And the last time we saw the 30-minute 200 moving average, it was that 35 EMA that got underneath, and then we took it right back up. So we are pretty far away here. It is possible that we do take a dip and then hook around that 30-minute 200 moving average to move higher, maybe for a Santa rally, but we'll see. That's looking a little bit too far out for day trading. And IWM, the implied move over here is between 233 and 241, and that is from options. That is also the 30-day average volatility, and the implied move on Thursday's contract is wider than the 30-day average volatility, which is 232 to 242. And to the upside, we do have the 30-minute 200 moving average, which we did get under yesterday twice. First at the beginning of the day, then we came back up, saw the 35 EMA as resistance, and then got back under. So 30-minute 200 moving average, 35 EMA, these two look like they could team up to be resistance. So maybe looking to where they cross could be a level of interest at 238. And then if we get above that, 241 is the top of the implied move, 242 on Thursday's contract. 1 hour 200 moving average is underneath us. 233 is the bottom of the implied move, and 232 on Thursday's contract. And zooming out, we don't have a ton of support as far as price goes, because we did just take a straight shot up to hit those new all-time highs. So not a whole ton of support right here, but we did see support at this election gap right here on the 1 hour 200 moving average, and then we did have that 50-day moving average as well, if you're looking for some deeper targets. And then DIA, the implied move here on the day is 439 to 449, and that is from options. The implied move on the week, which we are reaching towards the bottom of, 442 to 452. And to the upside, we are looking at that 35 EMA as resistance. Just like in everything else, we have been trading underneath that. For the week, we actually got underneath the 35 EMA last Friday, and then that carried out this week. Underneath us, 30-minute 200 moving average, which we did close underneath. We do have support right here where we closed the gap yesterday, and maybe not a strong support. We did see a technical bounce there, and that was when we closed this gap. 442 is the bottom of the implied move on the week, so that is a level to watch out for. And we have the 1 hour 200 moving average underneath all of that. I do believe that the 1 hour 200 moving average was right here. I'll go back in later and add that, but I do believe we bounced on it here above the election gap. And one last thing to look for before I call it a day here, 35 EMA coming down to the 30-minute 200 moving average. Those are our two main levels in our trading range here, and you could see back here, last time we saw that was after the election. We did see that big move up right here, election gap, pop up, and when we came back down, 35 EMA bounced just above the 30-minute 200 moving average. So taking the price out to see it a little bit more clearly, bounce here. So we are coming up to that. That is a oversold signal. So with that being an oversold signal, the fact that we're close to the bottom of the implied move on the week at 442, that is also an oversold signal. That doesn't mean we have to bounce. We could just slow down and chop around the 30-minute 200 moving average, or we could bounce here like we did over here. Keep in mind that was also paired with support of the election gap here. so it's not the exact same setup, but when the 35 EMA comes down to the 30-minute 200 moving average, that is something to look for. And there you have it, guys. Have fun today, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow morning.